Hey guys, what's up? Welcome to another episode with me, Shashank Odappa. And in today's episode, we are going to look at if you have a 50,000 salary, how do you basically do your SIPs? What is the goal we can target, and how do we structure this entire portfolio? Now, I know a lot of people, might not have very big salaries. We did some episodes on 1 lakh salary. Then I got a lot of requests saying, can you do it for 50K salary? So I'm assuming that you are just entering your job and you have 50K salary. I'm not going to put emergency fund into this because that everybody talks about already. So we'll directly go into how would I start investing into mutual funds, right? So let me quickly go into this, and I'll also show you some assumptions that I've taken as well. So here, what I've done is I have taken an average salary of 50,000 rupees, so you don't have any tax. 20,000 rupees, I'm assuming you can save and do monthly SIP, and 30,000 is your expense. Now, this is also taking into consideration that maybe you're staying in a PG and you have some fixed expenses. And if you're not, if you're still staying with your family, you still should not be spending more than 30,000 if you're getting a 50,000 salary. So that means 20,000 can be saved. Okay. I was assuming you're in the average age bracket of 25 to 28, and your goal is financial liberation or FIRE, okay, financial independence as they call it. Now, how would we start investing this? Let us look at it monthly. So now you are basically able to save 20,000 rupees as a monthly SIP, and a lot of people might think that 20,000 is bad, but it is not bad. It is actually very good. So please do your SIPs constantly. And how would we do it? We would split that 20,000 into 8,000 large cap, 7,000 mid cap, and 5,000 small cap. Now, again, a lot of people might have a question here, Shashank, saying that I'm too young. Why do I even need large cap? I can just go small cap and mid cap because I can play long term, right? No, that is not how things work. I always have a balanced approach because large cap always leads the rally in most cases. Yes, mid and small cap always do better than large cap, but we don't know the future. And let's assume that we will take a balanced approach. And technically, this looks balanced, but it is actually not balanced because you are saying 40% is large cap, 60% is mid and small. So technically you are absolutely fine because you are inherently playing higher risk. But having 100% in small cap is basically stupidity. Okay, nothing else but stupidity, because small cap basically works in cycles and there is no guarantee that small cap will do better in the future. Maybe mid cap will do better. Maybe the next decade is the year of large caps, or the decade is the year of mid caps. So why do you want to play only one cap? Play multiple caps. Okay. So we will have this, which is 40, 35, 25. Usually, again, this is expected return, but I don't think this much will happen. But this is according to past data. Does not mean future will have the same way. But large cap has usually been close to the index at 12%. Mid has been at 15, and small, if it's very good, has been at 18 over a longer term period. Okay. So we are taking a blended risk appetite, and the aim is to reach at least 13 to 14% returns on this, right? Coming to the projections of corpus, right? If you do a flat 20,000 rupee SIP, at the age of 53, you start now, and at the age of 53, which is 25 years of compounding, your total invested amount, if you're doing 20,000 every month, would be 60 lakhs. And your 12% conservative, if I just go with three scenarios. Now, obviously, as an analyst, we have to look at base case, best case, normal case, use case, all of that we have to look at, right? So we're going to look at conservative case, which is 12% index, base case, which is slightly better, 14.5%, and optimistic. Let's say we have a good lucky mutual funds we have picked and they've done well at 16%. So what happens is, at conservative level, if you're compounding at 12%, your 60,000 invested would become around 3.79 crores. 14.5 would become 5.98, and 16% optimistic is 7.93. But we will take base case because we are analysts, so we will always take a base case scenario. That would be around 5.98 on a 60 lakh investment, which is not bad at all. Absolutely not bad. Almost 10x in wealth multiple from the base, right? In 25 years. Now, this is also assuming I have not even put any single rupee above 20,000. Now, please understand, in realistic scenarios, it doesn't work that way because a couple of things happen. One is inflation goes up, right? So you can obviously increase your salary. Your salary will never be 50,000 always. Your salary will grow to 75, 80, 90, assuming you do a good job. It'll keep going up, right? So let's take a blended average because it is very difficult to calculate your salary approach every single year. So what we can do is we take a 10% step up, okay? Now, this is again a blended average. For example, 10% step up usually adds up towards the end because you start with 20,000, you put 10%, it's 22,000, then it becomes 24,000, then it becomes 28,000. So that compounds over time, right? So let's take 10% step up every year, which blends over a long period of time. Now, if you look at the same math at the age of 5 to 53, let's say 25 years you are investing. Okay, so what happens is your 60 lakh in now becomes from a flat 5.98 which you have done in the past at 14.5%. Now your step up investment becomes 12.21 crores. That means from your base, it has now gone up 20% by just doing step up of 10%, 20x. Okay. And your extra corpus becomes almost 6 crores that comes into the picture, which is again absolutely wonderful, right? Absolutely wonderful. So if you look at the fire analysis over here, your current monthly expense is 30,000. Inflation, I'm assuming at 6%, right? Expenses at the age of 53, which is at after 25 years, assuming you're 28 years of age today, your expenses would be 1.28 lakhs a month, maybe slightly more, right? But that is the expectation. Annual expense at retirement would be around 15 lakhs, and fire corpus needed, which is the 4% rule, would be 3.86 crores. So basically, if you do a step up at 14.5, you can reach fire by the age of 47. But let's not take that, because you might have some extracurricular activities, some problems, some emergencies, somewhere you will lose money, because the goal is not to simply just make fire money. The goal is also to go out and enjoy life. You might want to take a nice international vacation. No problem. 47 ko 53 karte hain, ya 55 hi karo. Either which way, it is a great place to be in, right? Because you're making a plan, so at least by the age of 60 you're not broke, right? If you want to look at it how it works on a year by year perspective, let's do step up only, let's not do flat. Now if we look at step up, which is year by year step up at 10,000, so this is how it looks month on month, right? Monthly SIP, your annual SIP is 2.4. Next year you will do 22,000, 24,000, 26, 29. Might not look big, but it starts compounding towards the end. Like towards the end, you will be doing almost a lakh and a half, 2 lakhs of SIP, which is very possible. And your annual SIP keeps going up as well. As you can see, at the end, you will be investing almost 21, 22 lakhs. Now, the beauty of SIP is the more you put in the start, the more benefit you get, not later. So you have to put more in the start for that compounding effect to kick in. So your total invested here would be this much. And at 14.5%, this is how much it would look like. And the extra corpus comes here. So every time you see your extra, the amount of money you're making from this SIP is beautiful, right? This is the extra over and above what you've invested. That looks very good. So, I mean, having this much money, even at the age of, let's say 53, even from today, is not a bad idea if you've just started at 20,000. Now, please understand, you will be doing much more SIP. You will not stick to 20,000. I'm assuming that, right? And that is how you would look at it, right? If I do a fund breakdown, this is how it would look like. So 8,000 into large cap, 7,000 into mid cap, and 5,000 into small cap. And we just keep doing this long term, right? We keep going. So large cap would be, your total invested amount in large cap would be 24 lakhs, which would be around 1.27. This mid cap would become around approximately your corpus invested amount would be 21 lakhs. You would have 2 crores. Here the invested amount would be 15 lakhs. Here you would have 2.9 crores. So even though you put less in small cap, because of the nature of small cap, you would ideally get much more than this, right? So main goal over here for someone who's starting off with a 50,000 salary, you have to only focus on two things. One is expenses should be as low as possible so that I can invest as much as possible. Number one. And second thing, your monthly SIP, which you should keep increasing no matter what, at least 10 to 15% every year. Now I understand in a realistic scenario, you might not be able to do that, because in a realistic scenario, what happens, you have your job might not be there. Sometimes for 6 months, you might not have a job. Sometimes you might not get a promotion. Sometimes the promotion is lower than the inflation rate. So we have to start stepping up our SIPs over and above the inflation rate. If inflation rate is 6%, I would want to step up my SIPs at 10, 12% and invest in income bearing assets that can give me 12% or 15% and above, right? And the beauty of this is try not to exit, if possible, not to exit. If you want money, you can always take a loan against mutual fund, but don't disrupt this compounding. Don't disrupt the compounding. Let it go. And by the way, this is an asset. So all of you guys think that you need money, you should remove the mutual funds. Do not do that, because mutual funds are considered assets in India. And you can, now there are a lot of loan against mutual funds, loan against shares. So let the shares compound. You can go and say, okay, you know what, I have a 2 crore corpus, maybe 10 lakhs I need loan. I will go pledge 10 lakhs worth of units and take some loan on that. That is what rich people do. They don't let the compounding stop. They let it go and they go and take some loan against the mutual funds at a very small value. If I have 1 crore of mutual funds, I will not go take 1 crore, nor will I take 50 lakhs. I will go take maybe 10 or 20 lakhs of loan to figure out my needs. Instead of removing 20 lakhs, which will stop the compounding, we figure out something at this perspective. Now, if you're looking at investing in a large cap fund, then you can definitely check out HDFC large cap fund. Again, please note, I am a SEBI registered research analyst. This is not a buy or sell recommendation, but you can check out HDFC large cap fund because they have been performing really well over an extended period of time. Because whenever I look at investing my SIP amount, I would like to look at companies that will stay for a long time. I know many other companies will look very attractive in the short run, but I would not prefer that. I prefer going with the bigger names. Axis Large Cap has also started doing really well. As you can see, Axis Large Cap also annualized over a long period of time is very similar to your HDFC Bank. They have an expense ratio of 0.72%, and these two companies is something that I would look at from a large cap perspective. If you don't want large cap, you want to play flexi cap, you can definitely play two flexi caps. One is Parag Parikh Flexi Cap Fund and the other one is HDFC Flexi Cap Fund. This is also quite good. Always people look at Parag Parikh, but HDFC Flexi Cap has also delivered very, very good returns. So these are the two funds that I would definitely look at from a long-term perspective. If I'm looking at mid-cap, then there are two mid-caps I would look at. Again, one is HDFC Mid-Cap Fund. Annualized return is 20%. 0.77 is the expense ratio. Again, here Kotak Mid-Cap is also very good. If you look at Kotak Mid-Cap is at 19.85, but a lower expense ratio at 0.3. And if you look at Axis Mid-Cap, they are also at 18% at 0.54. So HDFC has been the best with highest expense ratio. But if you're okay to forego like 0.5% of that, you can even do Kotak, right? A small cap, I think in small cap, there is no comparison. I think the best one till date has always been Nippon India for a very long period of time. But again, past performance does not mean future performance will be great. But yes, Nippon India has been doing well. Even with that expense ratio, they have been outperforming from a very long period of time. In fact, 2013 Nippon India was at 10 rupees NAV. Now it is at 181 in 2026. So basically in 13 years, it has given 18x. My God, that's how compounding works in the mutual fund game as well, right? So this is very good. I know there are a lot of people looking at Bandhan and all of that, but they have not been sustaining for a long period of time. If you want to play it safe, there is HDFC small cap also, which is not as good as Nippon, but pretty okay. I mean, I would not say it's the greatest because expense ratio is high. So sadly in this, I would only look at Nippon small cap and nothing else. Got it? So I hope you guys enjoyed this entire episode and I hope you guys liked it. Let me know if you have any more doubts, questions or comments below. I will answer it for you. Thank you guys. Take care. See you. Bye-bye.